How long will that price last?
I mean, I'm in the camp to actually sell something, physically sell it.
The fundamentals are tight.
And you've got the market moving by 5% in a day.
I think we've come to the conclusion that we are mildly bullish towards the market.
Volatility in grain prices in recent years has meant that the decisions farmers have to make about marketing grain are more crucial than ever. Nobody wants to risk a substantial loss. Nobody wants to miss out on a substantial profit. So we've given a team of experts the challenge of marketing a realistic tonnage of grain from a realistic farm. We want to see how the experts make the same decisions that farmers have to make. My name's Ian Ashbridge, I'm Farmers Weekly's business editor, and this is Gaining from Grain. Our panel consists of David Shepherd, Managing Director of Gledhill Agriculture, one of the UK's biggest grain traders. Alistair Brooks is Farm Manager at Waddesdon Estate in Buckinghamshire. He was 2010 Farmers Weekly Farm Manager of the Year and is solely responsible for marketing £1.5 million worth of grain a year. Jack Watts is Senior Economist in Cereals at the Agriculture and Horticulture Development Board. And Nick Tapp is Head of Agribusiness Consultancy at Bidwells. So gentlemen, it's 8th of September 2011. Over to you.
Technically, there's three aspects to markets to look at. One is fundamentals, S&D. Second is technicals, and third is what we would call outside factors like macroeconomic effects. Technically, I think the market at the moment is very, it's quite supported, but it's got quite strong resistance just above where. Yeah. So we could break out either way. It wouldn't take a huge amount and then if we went up, if we went through the resistance points on the upside, we probably then wouldn't stop for about £15 a tonne is the next resistance level.
But markets are rarely steady at a high-ish price for very long. They'll rumble along at the bottom at £60 or £80 for as long as you like, but they won't stay there for long. So there will be movement, and whether it's USDA maize figures good or bad, breaking out of that range.
I think it needs a driver, because the situation with in Europe with the consumer is that he's only buying hand to mouth at the moment. So the feed compounders are covering what they need for October now, but leaving Novdak and onwards. So I don't think it would take a huge price spike for livestock farmers to pile in on pigs and poultry and cover forward. Right. These are factors that we have to consider within the macroeconomic effects, which are mainly bearish to grain prices.
To be clear, this is different from fundamentals. We talked about earlier, which is supply and demand, basically.
This is outside factors.
So when we were talking about the US corn crop and potential news that could come there, that's within your fundamental analysis.
That's within fundamental. Technical analysis is chartist, looking at charts, analysing where technically the next market move should be, and this is outside the grain market, basically.
I think but it's giving outside uncertainty as much as the US corn crop does on the upside. This is giving us uncertainty on the downside.
We're a UK farmer. We're sitting there in a crop in a country that's not produced a record crop. An average size crop, good quality crop, and we have healthy domestic demand which could grow this season. So you've just got your sort of EU and UK hat on, you would say, well, you've got every chance of prices appreciating slightly. But you look at this lot, so you've got the Eurozone problems that are not going away, however many times they bail out the Greeks. You've got the potential for the euro potentially to fall apart, and God knows what happens then to value of sterling, because I think the fact we're all missing is if we're sitting here talking about 165 quid or whatever it is for November feed week. If we took the euro sterling rate of 2005, 6, you could probably knock, I haven't got the exact numbers, but 20 to 30 pounds a tonne off those prices just through the currency effect. But the key thing is what the corn crop comes up with. So the world wheat market is sitting on top of the world corn market, which in turn is sitting on top of the US corn market. And for the next price move, I think the market, today's prices, probably factor in a yield in the States of around about 150 bushels per acre. If we see something considerably lower than that, we would see, I'd suggest, a price rally that we ought to be taking advantage of. But we've got increased feeding of wheat at the expense of corn, and a drawdown on the wheat stock situation as well, albeit marginal.
And from a pretty high proportional position.
Yeah, I think that's true, although I would state that if 10 years ago you'd seen world wheat stocks of 190, 200 million tonnes, you'd have said bearish. Its availability of those stocks is one of the big key things.
It's where the stocks are.
And whether they want to sell them or not.
Yeah. Worth remembering also that around a quarter of the US maize futures are being held by outside investors, and very sensitive to what's going on in the macro environment.
Okay, just to remind you, gentlemen, you've got a total tonnage of grain on this farm that we've taken over of just over 4,500 tonnes, 4,525 of wheat, barley and oilseed rape. The farm, as he pointed out, is very undersold. Only 232 tonnes of wheat are committed at a futures price for movement this autumn. So we've got the following tonnages to move. We've got just over 2,500 tonnes of feed wheat, 683 tonnes of oilseed rape, 875 tonnes of winter feed barley and some spring barley, which may be useful for malting, 312 tonnes of that. But storage is an issue. It's all sitting in temporary storage at the moment. It won't fit in the sheds. So you are going to have to move some at some point.
So the decision really at the moment is: do we sell some wheat, some oilseed rape, or do what we call an advantage deal, which is move it, pay some rent, and price it later, or we sell some barley. I mean, I'm in the camp to actually sell something, physically sell it, because given the amount that 8% sold, he's very exposed to the market, this farmer, and he needs to be less exposed to the market.
There's probably not a great deal of downside in the rape market at the moment. I was beginning to just sort of zero in on the feed barley and just see what sort of people's thoughts were on that, really.
If we have to move something, then I would suggest that we should be looking to move the barley out.
My reasoning behind that is that you've got quite a high value amount of crop in the rape, sat with a relatively small tonnage.
One good reason for selling some feed barley is because feed barley is very close to wheat prices, if not the same. That cannot last long term. You don't want to be sitting in the second half of this year and suddenly the feed barley demand is all gone. The UK compounders valuing it at £10 below wheat.
That's a historic sort of trend, is it?
So we've got a price opportunity in barley.
Yeah, and we don't want to take the September price because, as Al says, we can hold on to October with our temporary storage.
Okay.
So if we are going to sell anything, we sell October. Do we know what nitrogen the malting barley is at? Because if it's one level, I would suggest one course of action, and if it's another,
I was thinking the same.
I would suggest another.
I think we should accept that it's probably of use to a maltster. So we accept that we have a short-term opportunity on our malting barley, such as it is, and we have a short-term opportunity on our feed barley.
So if we were to sell both of those now for October, that solves the space.
Solves the space from which we can hang on to our rapeseed.
It's more than sold to space bomb.
More than sold to space bomb.
Absolutely,
Yeah.
by miles. If you sold it all, I haven't just done that number, but if you sold it all, that would push us nicely over 30%. 30% sold. If you sold all the feed wheat, all the feed barley, and all the malting barley, if you sold a proportion to take us up to the 25% level, that would also give us another £24,000 more than we were originally going to get from just selling the feed barley.
Can we just explain why we're keen to get to a comfortable position sold? Why we're keen to get to 25-30% sold?
Market volatility.
I think this is an unusual farm for this year to be less than 10% of wheat and less than 5% of all cereals sold by the beginning of September. Typically, people are 40, 50, 60% sold. For whatever reason behind it, there's been either a lot of caution or no interest.
But we're reaching a number now of, say, 30%. Why would we be comfortable at 30% at this point?
I'm not suggesting we should be comfortable at 30%. I think
we're just doing it as we go.
Those crops have been there to sell for the last 2 and a bit years, and we're now entering the home straight. So to stop at 30% may
not be the right thing to do.
May not be the right thing to do.
And also, the market prices are at high levels historically, and we presume this farm is a good farmer and he knows its cost of production, and we're all aware of that we're locking him into good profit.
Doing what we've just been talking about doing in terms of barley, both barleys and the bit of wheat that has been sold, that takes us to 31.5% for October.
Was that what tonnage of wheat was that?
That was the 232 tons of wheat.
This is for it, yeah. Okay. So do we at this stage want to move up from our 31% sold to 50%, given that we're going to get another opportunity in a couple of months' time to come and play with this farm again?
Do we look at sort of taking some cover in a slightly different form in terms of a minimum price contract on some more of this wheat?
For which month?
Well, I don't know. I'm just putting it out there as a suggestion. I mean, possibly.
I think a May call. So say if you wanted to say May 12 call,
right,
it's going to cost. What do you think, Jack? I'd say round numbers about 18, 20 quid.
You're talking about a call option.
Call option.
Yeah,
Locking those. So say next May futures, I think are 175 or 6. So say that's 170 quid on the farm. You're securing a worst case scenario of 150 quid for May.
It's too much downside, really, isn't it?
It's expensive insurance to me.
We've made a decision, or we're coming towards a decision about our malting barley, our feed barley, the wheat that we've already sold, 232 tonnes of that, the situation we've inherited. We talked about effectively taking a bet on the price of feed wheat being above £150 a tonne by next May. And we were sufficiently confident that it would be that we felt to insure against that at £18 a tonne.
Well, we're still having that debate.
Listening to you, I mean, fine. I will go with the majority, but I don't feel comfortable about doing too much of that. To be fair,
I'm not trying to row anyone into a decision. I'm not trying to preempt the decision.
Where we're going to look at, let's put round numbers. Say it's 20 quid.
Yeah.
Cost of the option. We have to go over 190 quid.
Yeah,
to recover that. Go back.
Yeah, it's not going to do it.
And it's expensive.
Yeah. So the choice is: do we secure 150 in the hope that it'll go to 210?
Yeah.
Or do we take 170 today and say thank you very much?
Yeah. So I'd be taking 170 today if I was given that start.
Yeah.
Yes or no option.
I think we've come to the conclusion that we are mildly bullish towards the market.
But I would refine my position slightly, and I would say I'm mildly bullish in the short term.
Okay.
But I would be mildly bearish post-Christmas, and I could see the market drifting backwards gently for quite a long time.
All right, you, Jack, you're not holding a weak position as an economist.
Yeah.
I think
it's all down to you, Jack.
Looking at the market at the moment, there's one piece of the jigsaw just to fit into place on the fundamental supply one. That's US corn crop. Where's that? And that basically sets up the market, in my view, supply and demand wise, through until spring 2012. That's the world's main supply of grain coming through. We have the macro issues in the background I do see them. They are secondary to the fundamentals. The fundamentals are tight. I think anywhere beyond spring 2012, it's going to be in the hands of the gods again in terms of what the weather does to next year's crop, and that's what's going to drive it.
Plantings, yeah.
So I think my view would be mildly bullish through till April, May, until we start to see how the new crop is developing.
Because it is the US corn crop for the 2012 harvest that is the next big thing.
Yeah.
After we know what this harvest has done, it's competition for acres in the States. Corn prices are going to have to stay high to encourage it to be planted. I'm in Jack's camp. I think we need to seriously consider moving up to 50% sold there. Because we've got 50% still to play with it.
Are we going to take it up to 50% using wheat, or are we going to use a portion of the rape?
Some example, I would say.
Personal view, for what it's worth,
You'd
is
hold
I think
on to the
I'd hold on to the rape and I'd use the wheat.
Could we look at employing a safety net? So we're quite happy with where we are, where the market is through till early spring 12. Could we not find a price at which, when we get to that level, we have an allocated tonnage just in case the market does fall to that level? We can strike out as a sort of almost a stop loss position.
What
Well,
would
at top and bottom. I mean, we could say between now and when we do this again, if the market reaches, let's say, 170 on farm, or 175 or 180 on farm, we sell another 10% or another 15%.
Okay. Yeah.
Feed weight.
Right. So
the challenge of us meeting intermittently, of course, is the market can do a lot in the interim.
Well, that's what we're hoping will make it more interesting. And so if we edge up our next tranche of feed wheat sales, we're going to meet again sometime late November, probably. Where would that take us to in terms of our tonnage sold?
We are, so just for clarity, cash flow wise, we can sell the deferred positions quite happily.
Yep.
Because we've sold the barley now. So I mean, my figures are that with 33% sold, if we sell, do you agree with that, Al?
Thereabouts, yeah.
With the if we sell the barleys, both lots of barley, and we've got 232 tons of wheat sold. So we need to sell
basically another 800 tonnes.
Yeah.
Roughly.
Yeah, about 800 ton.
And so we're going to park our rapeseed. Park the rapeseed, sell 800 tonnes of feed weight.
We seem to have been in furious agreement about something. So we've said we're going to sell.
Started so well.
we just to recap. So we had 2,655 tonnes of feed wheat, 683 tonnes of oilseed rape, 875 tonnes of winter feed barley, and 312 tonnes of spring malting barley. We've decided that we're going to sell. We've already sold just around 140 pounds a tonne, a quantity of winter wheat, 232 tonnes. We've agreed that we're going to sell our feed barley now because we see a price opportunity in that it's so close to the wheat price, it's too good an opportunity to miss. And we're going to sell that at what was up? Was it exact parity to wheat? So
yeah,
so
we said 160.
160 pounds a tonne ex farm.
160.
Okay, the entire quantity of our spring malting barley. And to remind ourselves, what price did we say we were going to? £205 a tonne. Okay.
205 for. No,
I think it was a bit less than that for the.
I think it was 190.
Because we got a bit slightly dodgy quality.
Hold on, he's going to come out with a great traders comment. The futures have moved on since we started.
That's speaking, yes.
They have as well.
Yeah, I think
we said 200 with a fallback to 195 or something like
Right,
that.
okay, beg your pardon.
So we might return.
We'll budget at 195.
750 or something like that.
Okay.
In the middle, well, that's what we get after taking allowances.
312 tonnes of spring malting barley at £197.50
Yeah.
in converted terms. Okay, and we're going to sell a further tranche of feed wheat for May movement at the current May price, which was 170 ex-farm.
171.
Ex-farm.
Yeah.
£171 ex-farm. Okay, do we all agree on that? Because at the next time we meet, the market will have moved on and we'll have to reassess.
if we were to see 175 X for May, I would sell another 500 tonnes.
And what happens if it drops to, say, 160? Are we sitting on our hands?
We'll say, didn't we do well to get rid of what we've got rid of so far?
They've got to think like a farmer.
Didn't we do well to get rid of what?
Panic.
No, we've got to. If we're going to do upside, we've got to do downside, haven't we?
Well, all I would say for the market
I was
is
gonna say,
it
let's
should be
keep it
selling 10 to 20% for next year and over 150 quid North Deck 2012.
So those are the decisions our experts have reached. Will they be right? We'll look out for our next episode. We'll see if the market's moved against them or if they're really gaining from grain. As I point out, the economist and the grain trader both just shrugged, so that's fine.